So then maybe, even though the dollar is on a gold standard, not statutorily, but still it is, because there's no other way to have any prices that make any sense. The end game signal could really be in silver and not in gold. I mean, what it ends up being, I guess we'll see when it happens. It's going to be in one of the two. It's not going to be in Bitcoin. So either silver or gold or both of them are going to go crazy. Which one's going to go crazy first? I'm not sure. Now, what I you had said something that about silver backwardation that I have a different view on, and then we'll get into Japan. What is happening? You spoke about the LBMA. So, is there a shortage going on in the LBMA? It seems that we're getting pretty close to that because silver in London is more expensive than spot silver in London is more expensive than future silver in New York. Now, I don't call that backwardation because they're slightly different goods, especially according to Mises, who holds that even if it's the same good, if it's in a different place, it's considered, in terms of Austrian economic logic, it's a different good. You think that if we break decisively above 50, and let's say we run a bunch of not stop, what's the opposite of stops, buy stops or buy triggers, whatever, we could just like break through. If we break through 45-year resistance, we could get to 60 in a matter of days or weeks. And if that happens, then you could have the public waking up. If the public wakes up and starts to worry, then that's the end. Because the reason I'm saying that is that we might be far away from a top in terms of in terms of numbers, but in terms of time, I don't know. Because the way I see it, bank runs happen faster and faster and faster because the ease of moving credit is so exaggerated now. It's exaggeratedly easy to move any amount of credit anywhere in a second. So you could have a situation theoretically. I'm not predicting this, but if this happened, I wouldn't be like, oh my gosh, how did that happen? If silver hits like say 50, 60, and then all of a sudden there's a panic, and then it hits like I don't know, 400, and then nobody can get any, and then that's it. I mean, I, I'm not saying it's going to happen. But I'm saying if it did, I would understand why it did happen.
In the past, bank runs involved lines outside physical branches. Today, money can be moved across continents in seconds. This new reality means financial panics can escalate faster than regulators can react. If silver prices jump from $50 to $60 rapidly, fear could spread across retail and institutional investors simultaneously. A sudden spike to extreme levels, say $400, may sound dramatic, but in a world of automated trading, it's not impossible. Shortages in physical supply would worsen the spiral. Silver's move could become the endgame signal, potentially outpacing gold as the first warning flare in a monetary reset.
So then maybe, even though the dollar is on a gold standard, not statutorily, but still it is, because there's no other way to have any prices that make any sense. The end game signal could really be in silver and not in gold. I mean, what it ends up being, I guess we'll see when it happens. It's going to be in one of the two. It's not going to be in Bitcoin. So either silver or gold or both of them are going to go crazy. Which one's going to go crazy first? I'm not sure. Now, you had said something that about silver backwardation that I have a different view on, and then we'll get into Japan. What is happening? You spoke about the LBMA. So, is there a shortage going on in the LBMA? It seems that we're getting pretty close to that because silver in London is more expensive than spot silver in London is more expensive than future silver in New York. Now, I don't call that backwardation because they're slightly different goods, especially according to Mises, who holds that even if it's the same good, if it's in a different place, it's considered, in terms of Austrian economic logic, it's a different good. So while backwardation would be New York present silver is more expensive than New York future silver, that would be backwardation. We're not there yet. But the higher spot goes in London relative to New York, I'd say, yeah, that is the signal of a shortage. You don't have to know how much silver is there because the prices are telling you. Now, the way I see it, this could really be a problem if you're going to get some arbitrage, you're going to get some profit for people who can ship silver from New York to London. So they would do that. If for whatever reason they don't want to, tariffs or whatever they think, I don't know what the reason would be that they can't. But if they can't or they won't, then there's going to be some serious problems, and then you would see backwardation in both markets. So we'll see if New York can ship to London at all, or if they can ship enough of it. But now, right now, that's what has to happen.
A subtle but important shift is happening between London and New York silver markets. London spot silver has recently become more expensive than both New York spot and futures, a strong signal of tightening supply. In classical terms, this isn't backwardation yet, but it's a sign of regional stress. If New York cannot deliver enough silver to London due to logistics, tariffs, or other constraints, arbitrage could break down, leading to severe market dislocations. ETF structures like SLV could face unprecedented pressure. If demand overwhelms London's float, ETF share prices might temporarily decouple from actual metal value.
So the way I explained it is that the ETFs, if you want to do a silver squeeze, now would be the time. All you'd have to do is buy a bunch of SLV, which would force London to put a bunch of silver into SLV from its float, and then if they run out, then the price of SLV, not necessarily silver, but SLV would just like spike because they can't get enough silver in the thing, and then there's a shortage of shares, and then everybody wants the shares, and they can't match it with the silver price, so it trades at a premium. That's what would happen if there's a shortage. If you want to,
That
if
that is assuming that SLV actually holds the silver that it claims to have.
Yeah, yeah, yeah,
No,
yeah.
I'm not insinuating anything, of course.
Yeah, yeah. Okay, so if it does happen, let's assume it's a kosher fund in terms of it has all the silver that it says it has, then you could pull a 21st century version of Hunt Brothers if if there's just a bunch of hedge funds that just bought a bunch of SLV to see if it could stack the silver inside the ETF. And what would probably happen is that JP Morgan would have to take over stacking silver in New York, and there is enough there. So there'd have to be an emergency, like, because London can't do it anymore. So they call JP Morgan. They're like, you have to stack it right now, or SLV is going to blow up. It would be something like that. So I don't think it would work, but it would be an interesting experiment.
Yeah, well, it's above my pay grade, you know.
Okay, so you wanted to talk about the rabbit hole that you found in Japan,
Yeah.
and what that means about the Japanese monetary system. Why Japan is the fulcrum. Let's say the way that I put it on Endgame Investor is that the relationship between the U.S. and Japan is basically the relationship that it's been keeping the fiat dollar based monetary system alive. It's one of the central points. I don't know. I wouldn't say it's but it's one of the big joints of the system, because America nuked Japan in 1945 twice, and then Japan basically became the dollar's bitch ever since, and it's been that way. So they're taking Keynesianism to the logical extreme. That's what Japanese people do. They take everything and then they make it really extreme, and either like completely perfect, like sushi rolling, or that art where they take broken teacups and they put like gold glue and then make it really beautiful. Or everything they do is very exact. So they're taking Keynesianism very exactly here and very extremely.
Imagine a coordinated surge of hedge funds aggressively buying silver ETFs. If SLV truly holds the silver it claims, such a move could drain London's physical inventories. Should that happen, the fund might trade at a premium due to scarcity of underlying metal. JP Morgan, a key custodian, could be forced into emergency actions to source and stack silver in New York to prevent a blowup. This wouldn't be a simple repeat of the Hunt Brothers saga. It would be a digital, institutional version amplified by modern financial infrastructure, ETFs, and global liquidity flows.
2020, 258.4%. Right now it's gone down to 236.7%. But if you max it out, you can see the trend here. Well, we started at in 1980, it was 50.6%. That's why I say that the gold and silver spike of 1980 cannot be reversed this time if it happens. If the equivalent of a 1980 spike happened in gold and silver, it can't be reversed now, because back then it could be. Even Japan was only at 50.6% debt to GDP. Now it's at 235, right? So also, if you look at the prices in, where is it, inflation rate, right? Let's look at food inflation in Japan, right? So we're at 7.2%, right? And if you max it out and you see what the trends are, we're still at the highest pre-COVID level from 1980 to COVID. to COVID lockdowns, we're still at those levels. And this is food. This is basic necessities. Once these numbers start to go like up here in the 1970s, and they've been there before, like they're just that's going to be the panic because people are going to want food.
While silver may provide the spark, Japan could be the hinge on which the global financial system swings. For decades, the U.S.-Japan relationship has been a cornerstone of the fiat dollar system. With public debt at over 230% of GDP, Japan has taken Keynesian monetary policy to the extreme. Its central bank's balance sheet dwarfs its economy, and recent efforts to unwind it are tightening liquidity. The yen's weakness, surpassing 150 against the dollar, mirrors late 1980s levels. Japan's experiment is now facing limits. Any monetary shock, such as a silver spike, could ripple through its fragile structure.
So this that I'm sharing now is the Nikkei 225, I think it's called. So the stock market in Japan has been going vertical since March 2025. This is not a good sign. This is
It's
a sign.
because of inflation, of
Yeah,
course.
yeah, yeah. But so has gold, and it would be interesting to see this chart versus gold. I'd have to jigger that up. It would take me a minute. But if we talk about the extremeness of the Japanese Keynesian experiment, you can see it in the money tab over here with the central bank balance sheet. This is what they do. Let's max this out. You
Yes,
see, this is nuts.
it's
Like
insane.
this is yeah, and you can see here, look at this. Their balance sheet is actually going down now. They're trying to deflate it. You see the last 5 years, they're speeding up the deflation of the balance sheet, which is going to cause some kind of liquidity crunch in yen. But still their currency, if you look at the yen over here you have versus the dollar, it's above 150 again. So it's very, very weak. And if we stretch this out to 50 years, you can see we're at a high, meaning a low. This is the higher the number goes, the lower the yen is versus the dollar, a high since 1990, which is the last time the stock market in Japan climaxed.
Economic upheavals often follow recognizable rhythms: prosperity, complacency, shock, and adjustment. From biblical famines to modern financial crises, silver has historically been a barometer of instability. Post-pandemic disruptions, wars, and inflation are already straining systems worldwide. If geopolitical tensions ease, nations may face the aftermath: shortages, price spikes, and currency stress. Israel, Japan, and the U.S. are all experiencing different phases of this cycle, but they are interconnected through global capital flows. As markets edge toward pivotal moments, understanding these dynamics becomes essential, not to predict exact outcomes, but to recognize the signals before they peak.
They took power under Kennedy, actually. Kennedy was a pretty good president, but I'd say compared to the ones we have now, and ones, I mean the ones since to now. Um, but yeah, Keynesians took over under the Kennedy administration, and they're still in charge, and they will be in charge until the dollar falls. So I wanted to close this out with just a thought, and let you reflect on it. We're both in Israel. I don't want to completely ignore what's going on over here. Tomorrow, the hostages should be released. I'm happy about that, but I also know there's going to be another round of this because they still want to kill us all, and that hasn't changed. So we'll see what happens next. But just reflecting from 2020 to now, um, the anniversary of this war was not October 7th. It was Shmini Atzeret, which is the last day of Sukkot. The attack happened on Shmini Atzeret. That's when the hostages were taken. That's when they will be released, God willing, on Shmini Atzeret. So this was an exactly 2-year war, and it reminded me of a pasuk in Breshit and in Genesis, in at the beginning of Parshat Miketz, when Joseph is in jail and he's in Egyptian prison. It says, "Vayhi Miketz shnatayim yamim uparoch holem v'hineh omed al yaor." So at the end of 2 years exactly from the date that Joseph went into prison, he gets called up to the government to interpret a dream. And from there, what does he become? The world's first silver stacker. So, and we had a famine. So from 2020, we had 2 years, almost exactly 2 years of lockdowns. I count that from March 2020 to the end of the mask mandates in Israel, which was March 31st, 2022. That was 2 years. Then we had a little bit of an interim of, I don't know, judicial reform nonsense where everybody thought that it was going to change the country, where it's not going to change anything because the deep state is in charge. Whatever law happens to be, it doesn't make a difference. But everyone thought it was really important. And I guess symbolically it was, but it wasn't going to change anything. It's still not. And then after that, we had 2 years of war. And what comes after that? 2 years of famine and silver stacking. So I think that's what's coming next. After this is done, after this war is done, and all the miluimnikim, all the reservists get out of the army and they go back to businesses that no longer exist because we've been at war for 2 years, there's going to be some serious price inflation here. There's going to be, I wouldn't say famine, people starving, but there's going to be extreme poverty. And that's what we can look forward to here.